Nvidia earnings are out, hot off the presses. This video will cover everything you need to know. I followed this company very closely over the last 5+ years, long since 2018. Let's dig in. Okay, the earnings were really good, really good. Expectations, really high. The stock right now is basically flat. It's trading at about $496 a share. Hit a high the other day around $505 a share. So the 52-week high, 505.48, 52-week low, 138.84. Year to date, the stock is up 50%. And over the past 5 years, up almost 1,300%. So headline, Nvidia's revenue triples as AI chip boom continues. So we have Q3 non-GAAP EPS, $4.02, beat by 63 cents. Revenue of $18.12 billion. That's up 205.6% year over year and beat by $2 billion. Record data center revenue of $14.51 billion, up 41% from Q2 and up 279% from a year ago. So these numbers crushed. What's going on with the stock? Why isn't it rocketing higher? So Nvidia shares slid 2% in extended trading on Tuesday after the chipmaker reported fiscal third quarter results that surpassed Wall Street's predictions. But the company called for a negative impact in the next quarter because of export restrictions in China and other countries. Quote, "We expect that our sales to these destinations will decline significantly in the fourth quarter of fiscal 2024, though we believe the decline will be more than offset by strong growth in other regions." So massive revenue growth, 206% year over year. But the stock was already pretty expensive. A lot of that was baked in, and expectations were very high. Net income at $9.24 billion or $3.71 per share was up from $680 million or 27 cents per share in the same quarter just a year ago. And we already knew this, but Nvidia announced the new chip, the H200, to replace the H100 faster, has more memory than the current H100, and an additional ARM processor on board. And we've covered ARM on the channel. If you haven't seen that video, go watch that one after this one. The H100 is expensive and in demand. Now, part of the problem here is we have a lot of demand and the supply. It's hard to keep up with the supply. So Nvidia has been jacking up the prices and not selling as many chips as maybe you would think until you dig under the surface. This is talking about someone buying H100s for $10 million, which works out to about $40,000 per chip. GPU demand continues to outpace supply as generative AI adoption broadens across industry verticals. And this is from Raymond James, and he's saying, "We are not overly concerned about competition and expect Nvidia to maintain 85% share in Gen AI accelerators even in 2024. The question, of course, is how long can Nvidia keep that crown? Now, we've talked a lot about Nvidia on this channel. We talk about that full stack and that software, more of a software as a service type company with recurring revenue. Now, AMD is getting more into that space as well with that full stack. And we believe that AMD will at some point have 15 to 20% market share, but that's not in the immediate future. So Jensen Huang, CEO of Nvidia, quote, "Our strong growth reflects the broad industry platform transition from general purpose to accelerated computing and generative AI. Nvidia GPUs, CPUs, networking, AI foundry services, and Nvidia AI Enterprise software are all growth engines in full throttle. The era of generative AI is taking off." So outlook here, this is for the next quarter. Revenue expected $20 billion plus or minus 2%. So GAAP and non-GAAP gross margins expected to be 74.5 and 75.5% respectively, plus or minus 50 basis points. So record data center revenue, $14.51 billion, up 41% from the previous quarter and up 279% from a year ago. And of course, we've talked about on the channel how this company pivoted. At one point, when you think of Nvidia, you thought about video games. Now it's data center. I'm going to show you some slides here in a little bit to get you up to speed what's going on with Nvidia. We're also going to look at a chart. We're looking at valuation. We're going to break it all down for you. Just some of the quick highlights here you can see on your screen. Lots of exciting stuff happening. Constantly seeing new partnerships all the time with Nvidia. From Snowflake to existing partners like Microsoft, you think of Amazon Web Services, Google Cloud Platform, and many others. And it talks about GCP here, made generally available new A3 instances, Microsoft Azure, offering customers access to NVIDIA Omniverse, Oracle Cloud Infrastructure as well. I mean, Nvidia has their hands in every single pot you can think of and working with these partners to get into enterprise. In January of 2023, we did a top 10 AI stocks to buy for the next 10 years before the AI craze, Nvidia being a top stock on that list. And again, it's been long since 2018. I know this company very well. And when this stock was under $150, we were pounding the table at Fired Up Wealth. Of course, everybody wants to talk about Nvidia now, but not many people were really that bullish on Nvidia just a year ago. So gaming third quarter revenue, $2.86 billion, up 15% from the previous quarter, 81% from a year ago. So starting to see some improvement there. Professional visualization has been pretty slow. It was up 10% from the previous quarter and up 108% from a year ago. So it's good to see that. And automotive, we do think that automotive could be a huge play for Nvidia longer term. But looking at this quarter, it's only $261 million. It's a pretty small number, up 3% from the previous quarter and only 4% from a year ago. Of course, right now, automotive is going through a bit of a cycle. So I guess that makes sense. Now, I show you this just to be transparent. It's not meant to be a flex. This is my position in Nvidia. This is when it was $504, I think, yesterday. So right now, my portfolio, my main portfolio, my growth portfolio is about $1.5, $1.6 million. Nvidia is about 9%, $143,000 or so before the slight sell-off here after hours. And it shows that, gain loss 1,165%. But at this point, this is all house shares I have sold and shaved some profits along the way. And I'm actually looking to sell more at higher prices. I'll talk more about that later when we look at the chart. So a bit of DD here, some due diligence in case you don't know everything you need to know, you want to get up to speed on Nvidia. Now, if you haven't been to their headquarters in Santa Clara, it's very impressive. I wanted to share this stat here. Nvidia's platform is installed in several 100 million computers, is available in every cloud and from every server maker. It powers 74% of the top 500 supercomputers and boasts over 4 million developers. Okay, this is a money slide right here because a lot of people look at Nvidia and they think, oh, they make chips, they make semiconductors, they're a fabless semiconductor company. Of course, they have to design these chips and then send them off to a foundry like a Taiwan Semiconductor primarily for these advanced chips to actually produce the chips. But it's interesting because just the other day, we talked about how Apple was trying to replace some components that Broadcom makes for the iPhone. And after several years, they're basically saying that they can't do it, that they can't replicate it. And to me, and I believe it was a modem, but if Apple sitting on billions and billions of cash, $162.1 billion is what Apple has in cash and cash equivalents. So this company, Apple, some of the best talent in the world with $162 billion in cash, can't replicate this product for the iPhone, this piece, this semiconductor piece. So it makes you realize how hard it really is to replicate even the H100 and then the H200 chip. And NVIDIA keeps pressing the envelope, but it's not just about the hardware. It's also about the software. And this slide really paints the picture nicely. This is NVIDIA's accelerated computing platform. And on the bottom here, you see GPU, CPU, and DPU. And you've got cloud to edge, and you've got the platform. So HPC, NVIDIA AI, and NVIDIA Omniverse. So full stack platforms, NVIDIA HPC, NVIDIA AI, and NVIDIA Omniverse accelerate high performance computing, AI, and industrial digitization workloads. I had to say that like 5 times. I couldn't roll that off my tongue. We accelerate workloads at data center scale across thousands of compute nodes, treating the network and storage as part of the computing fabric. Our platform extends from the cloud and enterprise data centers to supercomputing centers, edge computing, and PCs. This is really powerful. You think of accelerated computing. Look at that chart from 1980 to 2030. That's a 1,000x in 10 years on the right-hand side there. And if you look at the quotes in the bottom left, Moore's law is dead. Jensen Huang said this at GTC in 2013. This is 2013, 10 years ago. And in 2018, John Hennessy said it's the end of Moore's law as we know it. This is huge. We talk about semiconductors, the new oil, how semiconductors are the fuel for all the secular growth trends we talk about on Fired Up Wealth. So waves of adoption of accelerated computing. You've got cloud service providers and consumer internet, enterprise, autonomous vehicles and robotics, and then industrial. Now on that video in January, we talked about how if you're investing in AI, you want to invest in companies that are focused focused on enterprise. And you can see on your screen, these two kind of stack together. So cloud service providers, consumer internet feeds into enterprise. And so when you think of Microsoft Azure, Amazon Web Services, Google Cloud Platform, these are platforms that easily allow scalability to these enterprises. So instead of like OpenAI with, say, ChatGPT, and you subscribe for $20 a month, Microsoft does something like Copilot, where it can roll it out to 1,000 employees across the enterprise at X amount per head, per employee. And so, of course, NVIDIA has accelerated computing for every one of these waves. And it talks about Omniverse, Drive, DGX Cloud, AI Enterprise, and HGX. Pause your screen if you need to. So this is the computing ecosystem. This is really powerful. 2020, 1.8 million developers. Just 3 years later, 4 million developers. Now, CUDA downloads 20 million. 3 years later, 45 million. AI startups, 6,000 to 15,000. And GPU accelerated applications, only 700 in 2020, now 3,200 in 2023. So you got 300 libraries, 400 AI models. So what NVIDIA allows an enterprise to do is, instead of building their own large language model, it allows the company to plug and play and essentially lease that language model as a software as a service subscription. And then it partners with Snowflake and with Amazon and Microsoft and Google and Oracle and so on, and allows customers to easily plug and play that into their enterprise applications. And we're really in the infancy right here, guys. So this is really something that's going to continue to accelerate over the next several years. The question, of course, is what does that scale look like? When do competitors come in and start to take more market share from NVIDIA? I don't think it's going to be anytime soon. We saw earlier 85% even in 2024. But at some point, it will become a bit more commoditized. Right now, NVIDIA essentially has a monopoly on this market. And they've got their teeth sunk in, they've got their tentacles in every place imaginable right now. Now in Fired Up Wealth, we love Flywheels. And here's a great one right here. And this is showing you that really for developers, end users, cloud providers, OEMs, NVIDIA, it's got you covered. And this is going to accelerate. You think of net-based retention with a SaaS company, you're going to see net-based retention where more products and modules can be sold to these customers and expanded out on that footprint. And this is what's awesome about it. You look at a pick and shovel play. When you look at semiconductors, the new oil, fueling all those secular growth trends. This is a great snapshot here. Everything from social media, content creation, software development, financial services, food, climate, drug discovery, legal, customer service, and more. The most important computing platform of our generation, generative AI. 1,600 plus generative AI companies are building on NVIDIA, and that number increases basically daily. So NVIDIA go to market across cloud and on-prem. I think this is a good snapshot here as well. So we talked about those partners, AWS, Google Cloud Platform, Microsoft Azure, Oracle Cloud, some new developments going on with Dell Technologies and HP, Lenovo, and more. So this is the NVIDIA AI Enterprise. So you've got that large language model container. You see on the right here where my mouse is. You got NVIDIA AI Playground, Foundations, the DGX Cloud, and then the chatbot. And so what this allows you to do, it allows your business to essentially take your proprietary data, allows your employees to use that data in effective and efficient ways. One quick example, let's just say you wanted to read through 3 PDFs that are 1,000 pages each. Your company can set it up where you can ask the chatbot within the enterprise. This is proprietary behind your own firewall. It's completely secure. You can also give permissions to different employees depending on the level of access you want to give them. And you can say, hey, tell me a quick snapshot of these 3 PDFs, 3,000 pages of information, and boom, you can get Cliff's Notes, and it's conversational as well. So it's much more entertaining and educational as an end user, because it's not just reading through 3,000 pages, which could take you, a week to do. And you can ask questions about the data, and essentially that data will get retrieved to you quickly in real time. And that's why it's so powerful. And it's really going to increase productivity, efficiency. This is a big deal, and we're just getting started. This is a good snapshot of the AI enterprise ecosystem. So on the left-hand side, you've got GSI and service delivery. So Accenture, you've got the big SIs, you got the implementers, right? The consulting partners that are going to help these enterprises. So Deloitte and Infosys and Capgemini, they're going to help install. So if a CIO, for example, is going to the cloud from on-prem and they want to build chatbots within their organization, these SIs on the left are going to partner with Nvidia as well as the other large cloud providers to help make that happen. And then you've got the AI platform. So Databricks, which we've talked about on the channel, Hugging Face, which I know is kind of a funny name, but it's a legit company. Snowflake, we've talked about this partnership, an amazing 1-hour conversational interview between the two CEOs, Jensen Huang and Frank Slootman, on the channel. You can check that out. And then you got the public cloud services we talk about, AWS, Oracle Cloud Infrastructure, Google Cloud Platform, Microsoft Azure, software platforms. So partnering with companies like ServiceNow, Adobe, and more. And then private cloud. So you could do an on-prem, like a private cloud, a hybrid cloud, or you could go full cloud services. So VMware's on there. Broadcom trying to get this acquisition done with VMware. And then you got the server OEM. So Cisco and Dell, Lenovo, HP. Nvidia has this entire ecosystem and has deep connections and relationships across the entire ecosystem. So checking back in, the stock is down 1.1%, trading at $493, $494 a share, down about 1%. So cash on hand, last earnings was $16 billion, and that number is actually higher now. So strong balance sheet here. And these metrics on Seeking Alpha aren't going to be updated because earnings just came out. But we know that the growth is strong, profitability is strong. The question is valuation. How do you value this thing? So let's look at the market platforms here at a glance. So data center, 56% of FY 2023 revenue, and that number keeps going higher. Data center is dominating NVIDIA's business at this point. Compound annual growth rate, 5-year, 51%. And then you've got gaming in second place. And then really these other two are small. Professional visualization and automotive are still very tiny. And you can see data center here from FY20, the jump is massive here from FY20 to FY23. Now here's where it starts to get a little bit interesting, all right? $1 trillion long-term annual market opportunity. $1 trillion is a lot of money. So it's breaking down, cloud data center systems, 300 billion, gaming, 100 billion, Nvidia AI Enterprise and DGX Cloud. A lot of this is going to be recurring revenue, $150 billion. So autonomous machines at $300 billion, and then Omniverse Enterprise, $150 billion. This is another software type play. So some of this is going to be recurring revenue as well. Now, $1 trillion is really good. But if you look at where it's trading right now, the market cap right now is about $1.23 trillion. Now, of course, if you have $1 trillion of revenue, you're going to trade at higher than $1 trillion market cap. But it is important to note that a lot of this is priced in, and that's why the stock is not ripping, because a lot of it's already baked into the stock price. So let's look at a chart and see where the stock could be headed next. So every single Wednesday in Patreon Discord, we do something that we call Chart Day. It's at 9 o'clock a.m. Eastern. It is recorded. It's posted on Patreon. In fact, we do live streams every Monday, Wednesday, and Friday at 9 o'clock a.m. Eastern. Those are recorded and posted on Patreon. So in the morning, we're going to do Chart Day again. If you're interested in checking it out, we've got a free trial. It's a 1-week free trial, gets you full access to Patreon and to Discord, so you can check it out and see if it's something you want to sign up for 2024. Invest in yourself. This is the best investing community on the planet. Head over to patreon.com/firedupwealth and check it out. Also, just in case you're interested, Seeking Alpha, I do have an affiliate partnership with them. If you're looking to do Seeking Alpha Premium, they're running a Black Friday sale, and I have a link below. You can go check that out. Now, I'm not paid necessarily per video to tell you that, but if you do sign up and use my link, and then I get a kickback for it. So check it out. It's a good price. You get a little bit of a deal, and I get a few bucks in return. And things like Patreon and Seeking Alpha, of course, are why we're able to do YouTube videos like this one for free. So thank you very much for the support. So anytime you see orange, this is going to be a previous chart day. Now, if you're following this channel for a while, we said $150, pound the table, $125, pound the table. $150 is really where we were loading up in Discord. And I remember the stock, a lot of people bought it at $150. It went down to $108. And I got a lot of nasty comments on YouTube about, I bought this at $150, you says goodbye, now it's $108. Patience, Daniel-son, patience, grasshopper. Because just a few months later, the stock was trading basically $500. So if you bought it at $150 or less in DCA, dollar cost average, like we teach in Fired Up Wealth, you're doing very well on the stock. Now, you don't care about what we said in the past fast, you want to know where the stock's going next. So let's take a look at it. Okay, so post-market, you can see the blue. Post-market, $494.35. Now, this is a Fibonacci retracement. You also have the Fibonacci pivot points in here. This yellow circle, we circled, I don't know, a month, maybe 6 weeks ago and said, here's the range it's going to be in between now and earnings are going to decide what happens next. It's an expensive stock. You wanted to buy it here, not necessarily here. Now, I'm looking to trim some shares myself, and I did have originally $500, and I changed that. I actually changed it to from $500 to $597 or $600, and now I've got some at $637. I think is where I'm selling some shares. So what I own right now is house shares, but I'm looking to trim more just to get that allocation down. It's about 9% of the portfolio. I generally like having 5% or less. Nvidia make a bit of an exception, but I do want to get it closer to say 7%, something like that. Now, the top of this retracement, the very top, way up here, you're looking at $750. Now, I think it's possible it gets there. Don't freak out. It's possible that it gets there, but not right away. This would be maybe this time next year, assuming that earnings are very strong, the next 3-4 earnings reports. I think the stock could consolidate. It could come down a little bit. I think the next stop for it's probably going to be $600. A lot of analysts have come out already and they've increased their price targets even before earnings. And I've seen everything from 600, 650, 750. The numbers are all over the place. So you never buy a stock just off analyst ratings, but just looking at this really quick, it's interesting to get an idea of sentiment. The highest analyst target, $1,100. The average, $644, so still quite a bit higher than it's trading at now, almost $150 higher. And the lowest price target's $560. And right now it's trading under $500 a share. Now, I'm not suggesting you go rush out and buy a bunch of it tomorrow or anything like that, but it is important to look at this and have an idea of what the sentiment is. So you have 38 ratings, strong buy, 37 buys, 1 hold, and 0 sells. So being in the game for a while, you've been an investor for 25 years, generally you look at the sentiment, you look at Wall Street, you look at analysts, if they're pumping the stock higher, the stock's probably going to go higher, but not necessarily overnight, and it could consolidate before it goes there. I think this stock will go to $600. I can't tell you if it's going to be tomorrow or if it's going to be 2 months from now, but I think it's going to consolidate. It's probably going to come maybe a little bit lower, and then it's going to run up to $600, especially as analysts come out and revise their price targets. I don't see anything in this earnings report that makes me think the stock is going to go back to $350, but it could happen. Here's the thing. A stock like this is priced for perfection. Any little thing. If they miss earnings, next earnings report, boom, you got a 30% sell-off after hours. So you have to be really careful with a stock like this. It's still one of my favorite companies, one of my favorite stocks. I've been fortunate enough to be in this company, this stock, since 2018. Have made a lot of money on it. This company is going to continue to do well, but you have to be careful with chasing stocks when they run. Now, this is, if you look at the chart, you just look at the setup. If you're looking at it from a technical trader type point of view, this is consolidating here, and it's probably going to consolidate in this range, and it's going to run up unless there's some sort of macro event. If the whole market sells off, well, forget about it. It can go lower, of course. If something happens to Nvidia, or God forbid something that happens to Nvidia's CEO or something tomorrow, well, the stock's going to be impacted. You can't predict all of those things. But looking at the trajectory of the company, this earnings report and where it's headed, the stock's probably going to work its way up to $600, and I wouldn't be surprised to see it even much higher than that. I think if you were buying the stock, and I said this in Discord, when it got under $400, I said $350 to $400, I'd probably buy a little bit there and see how earnings go. Do you want to buy it here? That's totally up to you. For me personally, I like to buy stocks before the market gets all excited about them, and that's what we did in Fired Up Wealth. I think the stock's going to go higher, but you have to be really careful what you pay, use dollar cost average, and just be very disciplined on the stock. Thanks for watching, guys. If you're new here, please subscribe to the channel. Click that bell for notifications. If this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.